What is the simplest way to start investing in the stock market? When I first started stock investing, the investing world seemed terribly complicated. Should I buy Tesla or Apple? Should I day trade or be a long-term investor? And where does crypto fit into all of this? I didn't know where to start. But then I read A Simple Path to Wealth by J.L. Collins, who favors a simplified path for investing consisting of only one stock index fund balanced by a second bond index fund. Not only simple, but this investing strategy beats 82% of professional fund managers and thus allowing us busy young persons to focus our energies on more important things such as building bridges, curing diseases, creating technologies, and starting businesses. Today I'll summarize the pertinent parts of the book that gave me the confidence to become an index fund investor that started me on my way to financial independence. And as you'll soon see, it's much simpler than you might think. Here's a chart of the performance of the stock market between 1915 and 2021. The first thing to point out is that the market always goes up. In fact, it has relentlessly gone up from its inception all the way to the current day. And J.L. Collins calls it the most powerful wealth building tool of all time. However, with that said, the ride isn't always smooth and market crashes are to be expected. From the biggest and ugliest event of the Great Depression in 1929, the recessions of 1937 and 1975, the crash of 1987, the early 90s recession, the dot-com bubble of 2000, September 2011, and the Great Financial Crisis of 2007. But if we look at what happens after all these crashes, eventually the market always recovers. For example, if you invested $1,000 in 1974, with the dividends reinvested at an annualized return rate of 11.9%, your $1,000 would have grown to almost $90,000 in the 40 years. This uncanny growth would have occurred despite all the market crashes. So knowing that all these bad things are coming, we have to be strong both intellectually and emotionally. We shouldn't panic and sell during the lows, and the lows will hurt when they come, but like blizzards in the winter, they should never be a surprise. But knowing that the stock market always goes up, how do we harness the powerful force of the stock market to build wealth and become financially independent? Well, we can actually buy the entire stock market through index funds, and J.L. Collins prefers VTSAX, which is an index fund that holds over 4,000 stocks and can be used as a proxy for the performance of the entire stock market. Index funds have the following benefits. First, the odds of selecting winning individual stocks are low, so it is better to buy the entire stock market, which in the long run will outperform individual stocks. Second, index funds have low fees compared to actively managed funds, and this is because they automatically mimic the index they track and don't need to pay expensive fund managers to choose the stocks in the fund. And third, even though they are cheaper, index funds outperform actively managed funds 82 to 99% of the time. So they are simpler, more affordable, and perform better. So knowing this, how do we design a portfolio to become financially free? J.L. Collins recommends two index fund portfolios, one for wealth accumulation and one for wealth preservation. The wealth accumulation portfolio consists of 100% VTSAX. This portfolio applies to when you are working, saving, and adding to your investments. He admits that it is a very aggressive portfolio prone to volatility. However, for someone with a long investing horizon ahead, this portfolio performs well. And also, having an all-stock portfolio allows us to hedge against inflation. And then we have the wealth preservation portfolio that consists of approximately 70% VTSAX, 20% VBTLX, and 5% in cash. This is the portfolio for when you are retiring. The bonds help to provide stable income, smooth out the rough ride, and serve as a deflation hedge, and cash is held in case of emergencies and for routine expenses. And J.L. Collins recommends that we make this transition into bonds 5 to 10 years before we retire. So, as you can see, all you need is VTSAX, VBTLX, and a little bit of cash allocated to one portfolio that will make you rich, and a second portfolio that will keep you rich. And with index funds' power to harness the market, you'll be well on your way to financial independence. And this is just a small part of the book, A Simple Path to Wealth, so if you like it, check out J.L. Collins' book and blog in the link below. And thank you to my 13 subscribers for all your support. So if you like this video, check out this one about the time I lost $50,000 but learned how to become a millionaire through the power of compound interest. So this has been the Tin Man at TinManFIRE. and we'll see you next time.